Awesome. Welcome. Thank you for joining. This is our Scaling with the Unsung Heroes Finance and Accounting webinar presented by Gray Fox Collective. I can see answers being submitted for the poll that you should be seeing in front of you. Please go ahead and take a quick moment to answer that if you haven't already. On a scale of 1 to 10, 10 being absolute confidence, how confident are you that you can reliably use the financial data in your business's books to make sound strategic decisions? I'm seeing a mix of answers coming here. Be honest, it's anonymous. All right, we'll go ahead and get started here. So as I said, we are Gray Fox Collective. We are happy to present Scaling Faster, the Unsung Heroes, Finance and Accounting. All right, so Gray Fox Collective is an objective-oriented business. So we're going to start with objectives. Understand two of them today. Understand how to better leverage the accounting and finance function to scale your business. We're here to help you understand how to better leverage the accounting and finance function to scale your business. We also believe very much in tools, processes, models. So we're going to introduce models and tools to help you systemize, stabilize, and scale. Agenda today, we've got a few guest speakers and key speakers today. So we'll do a quick round of introductions. We're going to talk about the importance of accounting, what we like to call the accounting function, the finance function for SMBs. We're going to go through the 6 components to financial clarity. We're going to get a word and have a quick conversation with one of our good friends and clients, Mike Ketchin. We'll finish up with a Q&A. So this is a good call out that please feel free throughout the webinar. If you've got a question about any content, something that we're covering, if you have a question that you think is related that we're not covering, please feel free to put the question in the chat and we will get it answered. We'll likely save the answer for later in the session, but we will get to your questions here. And then we're going to finish with just some quick closing remarks and let you go about your day. I'm going to go ahead and share the results of the initial poll here. So see, there's a mix here. Anyone from a low confidence in the clarity of their books, thanks for your honesty, anywhere from 1 to 3 all the way up to 10. So we've got varying degrees of confidence in our business books today. We'll talk about the importance of that. All right. So a quick round of introductions here. Pleased to introduce our CEO and founder, Brett Moore. Brett has an extensive background in accounting. He's held the CFO seat. He's an EOS implementer. If you're not familiar with EOS, that is the Entrepreneurial Operating System. I believe he'll call that out once or twice in today's presentation. He's also a successful entrepreneur that certainly understands the importance of having clarity in your books. Happy to have Tanner Smithwick on the call. He is a CFO that has clients in several different industries. I know we've got multiple industries represented today. In our attendees, I know that we have several real estate and real estate investment firms on the session here today. Tanner certainly has extensive experience working with our real estate clients. And as I said, we have Mike, one of our favorite clients. He's a former school administrator turned successful real estate investment entrepreneur who has also learned the importance of needing financial clarity in your books. And then me, I'm your MC. I'm Steve. So importance, we talk often about the 3 functions of a business. We've got operations. You're likely a business owner, a business leader. You probably understand what your role is on a day-to-day basis in driving operations for your business. We talk about sales and marketing. Sales and marketing, you probably have, while you might need help there, you probably have a general idea how to drive your sales and marketing function. We have certainly found that the third function to be the one that is the most important, which we'll illustrate in a moment here, but sometimes is the least natural for a business owner to lean into and drive. So when we talk to clients, we talk about things that they're trying to accomplish with their finances. One of the first things we hear right off the bat is cash flow. They want better cash flow management. 82% of business failures are because of cash flow mismanagement. Think about that for just a moment. We all have heard some version of the stat that businesses fail 90%, 87% of businesses fail within the first 2 years, right? Well, look, right staring on the screen here is a very powerful fact saying that 82% of those are failing because they just weren't able to manage their cash flow. Financial planning, a survey from the National Small Business Association found that 70% of small businesses that prepare and monitor formal budgets were more successful. Seems pretty rudimentary, pretty basic. If you have a plan, if you have goals and targets, you'll likely execute better. Believe it or not, from our experience, it is not uncommon for SMBs to not have a consistent, prepared, executed budget process. Access to capital, 43% of small businesses applied for loans in 2022, and 27% of those were denied due to incomplete financials. Think about how important cash flow is to your business. I know for our real estate investment firms that are on the line here today, cash flow is very important. You could have all of your ducks in a row, but if you don't have complete documented financials, you're at risk for being denied a loan that would pump cash flow into your organization. Tax savings. The average small business pays an average of $12,000 a year in tax penalties due to errors. And we are not tax CPAs, but we absolutely work hand in hand with tax CPAs to make sure that you've got clarity in your books, that your books are clean, and that you are well positioned to maximize your tax returns. All right, so with no further ado, I'm going to hand it off to Brett to take everyone through the 6 components to financial clarity.
Thanks, Steve. All right, I'm excited to talk to you guys about this today. And the way that we're going to look at this through these 6 key components is thinking about this part of your business, the accounting and finance function of the company, through the lens of these 6 different components. And what I'm hoping to achieve is to help you see that by strengthening all of these components within your business, using the different tools, processes, and ideas that we're going to discuss, this is what leads to financial clarity in your business. Financial clarity then allows you to make the strategic decisions necessary to grow, scale, stabilize, whatever it is you're trying to accomplish. So starting high level here, we're going to talk through structure, process, scorecard, strategic plan, rocks and milestones, and wrap it up with a meeting pulse. So I'm going to dive into structure first. Why structure? Clarity in roles to drive accountability and identify any gaps in experience. We need to understand who is doing what when it comes to the accounting and finance function of your business before we can do anything else. So the question I want you to ask yourself is, if I want to scale, do I have the team to do it? Now, Steve mentioned before, we look at businesses typically under 3 functions: sales and marketing, operations, finance and accounting. You've probably got the right team in place for operations, likely on the sales and marketing side too. Where we have a tendency to see a gap is in the finance and accounting. because businesses start small, they begin to scale, and they think they have adequate coverage there. But when they're really looking at what it's going to take to grow their business, ask yourself the question if you have the team to do it. So the tools I'm going to talk through with this are, first one's called the accountability chart. What makes this different from a standard organizational chart is when you build this out, what you're doing is defining the seats that are necessary for this function to be successful. And it is the definition of those seats that make it an accountability chart, because you're saying these are the roles and responsibilities necessary for the person who is sitting in this seat. We tend to see a lot of business owners or business leaders sitting in all of the various finance seats because they don't have someone or simply don't trust someone to sit in it. But you have to understand the accountability is then fully sitting on you. So I'm going to go through an example of that in a sec. But first, I want to talk through the next tool, which is what we call the responsibility matrix. So while the accountability chart is the high level overarching roles and responsibilities, the responsibility matrix is much more detailed. This is who does what and when, and who's the backup. Unfortunately, we have to think about what we call the proverbial bus. If you've got someone sitting in a key finance seat in your company, even if it's just the bookkeeper, that person's holding the keys to all the financial data, processes, how things get done. If they get hit by the proverbial bus, who's stepping in to do that work? And do you have a plan, or is everything in their heads? So that's what the responsibility matrix helps with. I want to talk through the accountability chart. This is just an example. We work with a lot of different small businesses, so we're fortunate enough to get to see different structures. This is kind of just some of the standard positions that we see and how we've helped small businesses define them for their own company. So we'll kind of start at the top, that overarching person sitting in the high level seat. Customarily, that's a CFO. Now, before you jump to the conclusion that you need a full-time CFO or you can't afford a full-time CFO, this is just talking about what this seat is responsible for. This can ultimately be a part-time role, a third-party role, a fractional role. But what's important is making sure you understand, what do they do? So for us, the CFO high level, they're the ones accountable for budgeting and forecasting, advanced analysis, strategy for the company. So they're sitting at that high level C-suite strategic thinking kind of level alongside the business owner. Then you have the controller, similar to a CFO. Well, maybe your business isn't big enough for a full-time controller. This can still be part-time. It can be fractional. They're going to be a little bit more focused on the accounting side of the business, less on the finance. So this is more month-end, year-end close procedures, accounting accuracy, oversight of a bookkeeper and accountant. Major pitfall that we see people get into is they've got a bookkeeper. The only oversight that bookkeeper has is a business owner. That business owner frequently does not have an accounting background, so you don't really know the accuracy of what the bookkeeper is putting together. This is where the controller comes into play. They're the ones reviewing all of that, ensuring that it's in accordance with GAAP or generally accepted accounting principles or whatever regulations you have to stick to. Other things under the controller's umbrella are things like compliance. Could be HR compliance, IT compliance, tax compliance, insurance, anything that is compliance related. Standard reporting is another, and a big one is system integration. We see a lot of companies that need new systems, are growing their existing system platforms. That frequently falls to the controller. Then we've got a bookkeeper and accountant. This is the most common position we see with small businesses. This is just the standard workhorse of the accounting function. They're doing the data entry, AR, AP, managing bill pay and invoicing. They're doing the month-end close procedures, payroll processing, and things like that. Now, these other two seats are not necessarily on your team, but they are on what we would call your bench. And that's your CPA and a financial advisor. So a CPA, we want to define the fact that what they are accountable to and responsible for is providing tax strategy, tax filing, and tax planning. Oftentimes, people become frustrated with their CPA because they feel like they should be getting more consulting information from them, whatever. This is not their role, and that needs to be defined. Financial advisor then That's investment management. And why I think this is important for a small business is because you need to know what you're doing with your profit allocation. If your business is making money, where is that cash going? What are you doing with it? So this is just a standard accountability chart that we see to help define the structure. Next, I want to talk about process. This is a huge one. Beginning with the quote, systemize the predictable so you can humanize the exceptional. Steve mentioned that I'm an EOS implementer, so you're probably going to get a taste of some EOS concepts here. This quote is from Gino Wickman, author of Traction and founder of EOS. I like this because what this means is you have to systemize everything in your business that is possible to be systemized. Turn everything into a process that can be, so that you have capacity to humanize the exception. In small business, we're constantly going to face things that we can't control. We're going to have to make a snap judgment. We're going to have to deal with an issue as it comes up. In order to have time and capacity to deal with those exceptions, everything else in the business needs to be turned into a process and systemized. So main points I want to make here. First, the good news is that most of accounting and finance is process-based. I'm going to go through a list of those here in a sec, and you're going to see this is a heavily process-based function of the business. Good process leads to good data, which then drives sound decision-making. It also drives cost savings. By having the processes in place, you know you're being efficient, you know you're doing things the right way, and you're able to identify when things are, costs that shouldn't be there. Last main point here is, in order to be most successful with this, you have to be leveraging the proper technology. You can't just use whatever you think is best. You have to take the time to decide, if I'm taking my business from here to here, what is the technology that's going to get me there and help me operate these processes effectively? So how do we do this? From our perspective, it's a simple but not easy process. First is you're going to identify your core processes. Core processes are the high level, big, overarching systems in the business. It's not your SOPs. It's not every step-by-step instruction. It's high level. We're going to document those high level using what we would call the 20-80 approach. 20% of the steps that get you 80% of the way there. We're not going for 100%, not yet. Step 3 then is to determine the SOPs that make up those core processes, and those we will build step-by-step procedures. This is what's going to make everything in your business repeatable. It's also going to make training that much easier. If you have a bookkeeper and you lose them, it's a commonly turned over position. Step-by-step procedures, SOPs, and core processes allow you to quickly onboard somebody new without losing the traction that you had. So just a few examples on processes: cash collections, cash disbursements, payroll, month-end close, financial reporting and data review, compliance preparation, expense reporting. These are just a handful off the top of my head that make up the finance and accounting function. You can see how much of this function truly can be systemized. Okay, moving on. I want to talk now about the scorecard. We're starting to build the structure. We're getting the processes in place. How do we then start to analyze the data that's going to be produced by that? Analyzing data for decision-making is a major step in moving from mom and pop to professionalized. We get to work with a lot of successful businesses, but many of them still operate under this kind of mom and pop ideology and methodology. Starting to use data to make your decisions is moving you towards that professionalized business. So why are we doing this? Because decisions should be based on data, not a gut feeling. And what this does is it allows us to move from being reactive in the business to being proactive. So how do we do this? First is to identify the key measurables, or KPIs, key performance indicators, that drive the business. So we're going to establish two things. One is leading indicators, the other is lagging. What we tend to find is that a lot of businesses are exceptional at finding lagging indicators. These are things like gross sales for the month. So if you look at gross sales for the month, that's already passed. That has already happened. You can't do anything to impact those sales anymore. What you want to do is partner that data point with a leading indicator. What is the activity-based measurable that is driving the lagging indicator, that is driving the sales? Is it number of cold calls made? Is it number of new accounts open? What is that activity that's going to drive the outcome? Then we're going to track and review these numbers on a weekly and monthly basis. It's not enough to have the information. You have to do something with it. By tracking it weekly and monthly, you're beginning to see patterns and trends that are driven by the data. Patterns and trends allow you to predict future issues and then make decisions, solve those problems before they become a reactionary situation. You're proactively addressing it. You're leveraging the data and the trends to predict those future issues. I'm going to move on here, take a quick break because I've been talking at you for a few minutes, and we're going to get another poll question going.
How many hours a week are being spent on your business's finances by the business owner or an employee without a financial background? So think for a moment how much time you're spending on operations, driving the day-to-day business operations, how much time you're spending on sales and marketing. Now, how much time are you spending on the finance function? So I can see the answers starting to roll in here. Please continue to vote on those. I can see right off the bat, we've got a few that are spending a minimal amount of time. There's a minimal amount of time being spent, at least by either the owner or someone without a financial background. I see several now taking the lead here of 4 to 9 hours. So 4 to 9 hours a week are being spent on finances by someone that's either the business owner or someone that doesn't have a finance background. So we'll go ahead and wrap this poll up here. Another quick call out here. If you have any questions about any of the content that you'd like us to answer live here, please go ahead and put that in the chat.
Thank you, Steve. One thing I want to say on that poll too is if you look at 4 to 9 hours a week, or even 0 to 3 may not seem like a lot, but over the course of a year, that's a considerable amount of time that you've committed to this function of your business without necessarily having the appropriate background to do so, and may not be the highest and best use of your time or the person who's doing it. All right, I'm going to move on. So we've talked about the first 3 components. I'm going to talk about the next 3 now. So we've built out the structure, the framework, the processes, and we're looking at the data. Now, what are we going to do with that? So the 4th component, we call the strategic plan. I am amazed at the number of businesses that kind of just fly around day in and day out and don't have a plan for where they're going and how they're going to do it. The way that we simplify this process is to begin with a 3-year picture. So we want to identify and paint a picture of the future state of the business. Where is it that you're wanting to go 3 years from now? What are the revenue and profitability targets that are necessary to hit? What are the people required to achieve those revenue targets? What's the technology to support those targets? And then what are the major milestones needed to execute during the next year, the next 2 years, the next 3 years in order to see that 3-year picture come to fruition? What this allows us to do is paint a very clear understanding of where we're going. It makes our next step in the process of defining a 1-year plan that much easier. Now we can design a 12-month plan for execution towards the 3-year picture. We have 2 simple tools to do this. First one is budget. This is static. This is non-changing. We're going to build a budget on a monthly basis of what it is that needs to be achieved month in and month out for the next 12 months. We're at a great time of year for this because we're coming up towards the end of the year, but there's enough time that we can really spend thinking about what is it going to look like for the next 12 months. So we're going to begin by building a budget, and we're going to keep that static. It's not going to change. Then we're going to use that budget to develop a forecast. This is dynamic. This will actually be developed and improved and changed as the year goes on. Month to month, things will change, quarter to quarter. That's where we use the forecast. But we will keep the budget static so we can continue to refer back to that and see how we're tracking against what we thought we could do. What this is going to allow us to do is identify how effective are we at actually predicting our future for the business. Next, we're going to bring this down to the ground. Now, if you are familiar with EOS, you may recognize some of these terms like rocks and milestones. Rocks are just 90-day priorities. So we've set the 1-year plan and we have the 1-year goals. Now let's break those down further into quarterly rocks, 90-day priorities. These are the biggest priorities that have to be executed upon in order to drive results towards the 1-year plan. Could be how many deals need to be closed this quarter? How many new client leads have to be identified? But we're going to build it on a quarterly basis because human nature is that you kind of run out of steam by the end of 90 days. So we're just going to break those goals down into 90-day chunks. And then we're going to further simplify that down to 30-day actionable tasks that we call milestones. This is just making it more and more digestible, more and more achievable. And it's going to allow you to drive accountability because now, instead of expecting someone on your team to go achieve whatever the financial metric is they need to hit over the next 12 months, you've made it very clear what needs to happen in 30 days. It's a lot easier to digest. So then how do we stay on track with all of this? One of the most important components of the 6 components to financial clarity is the meeting pulse. Why do we have this? This drives accountability towards the execution of the 30-day milestones, 90-day rocks, and the 1-year goals. And it allows you to identify and solve issues faster as they come up instead of waiting until down the road. So I have some examples here of what it looks like to design and define what the meeting pulse is for your business, but it really depends on your business. This is just what we've seen successful when it comes to the accounting and finance function and how we stay on the same page with that and drive towards those goals. The first is a weekly check-in. This is time to review KPIs, your key performance indicators, and your activity-based measurables, and drive accountability towards the execution of those things. Number 2 is a monthly financial review. Here we assess your budget to actuals and ensure that you're on track towards that 1-year plan. I have to call out here that prompt and accurate bookkeeping is a requirement in order for this to be successful. To us, prompt bookkeeping looks like a month-end close of 10 to 15 days. By the 15th day of the month, you should have your books closed from the prior month, which is going to allow you to produce this information and then go and make decisions with it. Lastly is the quarterly deep dive. We're going to dig deeper into data, assess learnings from the prior quarter, plan strategically for the next quarter, and make adjustments as necessary. So this is where you're pulling yourselves out of the business momentarily once a quarter and looking at everything that's been achieved financially with the company and what adjustments need to be made. So those are the 6 components to financial clarity. I'm excited to get to transition now and stop talking at you guys and have a conversation with Mike. I'm going to bring Tanner into this as well. Mike, I'm just going to ask, since we had such a fun way of meeting, if you can share just how we initially met, as well as what some of those pain points were that you were experiencing around this part of your business when we first met.
Yeah, we met in doing my favorite thing, having a cigar in a private cigar community we're both part of out in Bozeman, Montana, my favorite place. Wish I was at my house out there all year round, but my wife can't get on board yet. And the pain points were something that, and, the reason I was willing to come on here is I think it doesn't get talked about enough in this business. We just recently acquired, we're at about $100 million worth of property now. And when we started, I don't know, 6 years ago, whatever the hell it was, you think about being a real estate investor. Eventually, if you're going to stay in this business long enough, you have to become a business owner. And you don't know what you don't know until you know it. We were realizing that we were getting subpar bookkeeping. Luckily, we have a world-renowned CPA, but as you mentioned at the start of the call, Brett, a CPA is not necessarily part of your internal team, nor should they be, in my opinion. They're really there for tax strategy around kind of your holistic approach. So we were looking for kind of bookkeeping, CFO, controller, some of those roles without even necessarily know what they were. And we kind of hit it off because we also use EOS in our day-to-day business. So I think what makes Gray Fox unique, and that's one of the reasons we enjoy working with you guys and Tanner and Diego and Ethan and the whole team, is you guys are able, because you're speaking some of the same language as investors and business owners and really forward thinking financial analysts using technology. You can scale together, right? You can be a teammate that scales together. I mean, I just talked to Tanner yesterday in our own business about, hey, I want these kind of reports from my mind, right? Like we call it, cash flow per door, right? We're working on a custom budget that does that. You don't usually get that with other firms unless they really understand your business, they understand real estate. We're also talking about bringing on that controller role because I think we're getting close to ready for that. It's not often you find a firm that can do all those things and be willing to pivot with you in real time. I also going back and cleaning up other mistakes and understanding the language that we all use internally in our own company. So those are some of the pain points we were dealing with that Gray Fox through this collaboration has been able to help with, and it's been awesome to work with you guys.
I appreciate it, Mike. And yes, meeting at the cigar lounge is about the best place you can start a relationship.
Good things always get done.
We don't want to make this a cigar review, but Mike, do you have it? Mike, do you have any like favorite cigars, or what are you normally
man.
carrying?
Anytime you can get anything by Atabay or any real Cohiba, not the Dominican, the Cuban Cohiba. Those are kind of my two go-tos.
Okay, awesome, thank you. All right, so I think we're going to transition now into virtually the final phase of the webinar here, which is the Q&A. So please, if you haven't already, I see that there's a few questions that are starting to come in here. If you haven't asked any yet, please do. Obviously, we threw a lot at you. Please feel free to ask questions. Okay, we've got one that came through here. Could you work directly with my tax CPA?
Yes, I will take this one. I find that more than most questions, this is a question we field on the front end of engagements all the time. And the answer is holistically yes. And in a perfect world, your fractional or internal bookkeeping team should be working with your tax CPA. Kind of like Mike alluded to, your CPA is kind of in that role for tax planning. What they think about the tax basis of books is a very different world than the accounting. So when your CPA picks up the books, they're not necessarily reviewing the books for accuracy or digging through the details. They're picking up the books, they're preparing a tax return, they're helping with tax projections. What we find is a really helpful partnership is when you have your bookkeeping team that speaks the same language as the tax folks, that you can collaborate around some of those questions that they might have that's a little more nuanced or in the weeds that, maybe the business owner, just by nature of what you're doing, you're not in the best seat to answer those. So we find that it works well for us to be a liaison between the business owner, your team, and your tax CPA, kind of bridging the gap on some of those communication pieces. And it also helps us as well if there's, certain things that you guys are focusing on for tax purposes. It's helpful for us to be in communication with that tax CPA to help kind of guide those metrics and those KPIs and all of those things during the year to drive towards that. The other piece I like to call out too that we find a lot is we kind of help drive that conversation with your tax CPA around how do you plan for tax filing throughout the year. A big piece of tax planning is making sure that you're filing quarterly estimates on time and making payments in the appropriate amount. So part of that, again, back to regular bookkeeping that's accurate, is being able to provide, year-to-date financial statements that have accurate numbers that your CPA can look at and help evaluate those tax payments that are necessary.
Thanks, Tanner. Are the basic reports out of QuickBooks good enough?
I'll take this one as well. I love this question because the answer is yes. QuickBooks has a very robust stack of reporting. Oftentimes the challenge is just knowing, one, how to pull it, how to read it, and obviously underlying all of that is the data in that report good enough? Can you count on the data to be accurate enough to make decisions? So in our world, most of what we do around the analysis and the planning is based on those basic reports that you're probably used to seeing as a business owner, your P&L, your balance sheet, statement of cash flows, accounts receivable aging, AP aging, depending on what your industry is. All of those reports are the foundation of that financial analysis and planning. So yes, the reports in QuickBooks they're enough, and the data has always been there. Sometimes the challenge is just knowing how to pull it out and having someone that can kind of help tease out the information.
Yeah, I know. I was having a conversation with one of our clients the other day, and we were actually having, again, a strategic conversation, not about finances. We were talking about some sales initiatives, but you need good financial data to help with some of that reporting, right? And he made the statement like, wow, this data has been in here for years, and he didn't know, right? And it was just a matter of getting it organized, categorized, and then presenting it in ways that can be easily understood and help you make decisions.
Can I jump in right there?
Yeah, of course, Mike.
Because I don't think, I mean, you guys are all being very modest, and I don't know if we're supposed to curse on this thing or not, but I mean, I'll be brutally honest. It's not a matter of the reports as a business owner. You're a business owner for a reason. It's a matter of the person interpreting and presenting the data. We've had, oh God, 3 or 4 bookkeepers before Gray Fox. They were all using QuickBooks. I knew something was inherently wrong. I finally got connected with a Tanner, through a Brett, through a Diego and Ethan, and you uncover that things were in fact wrong. Because it's kind of like I equate it to like football, right? You are the quarterback and the coach when you own a business. I picture Gray Fox in my business as like my offensive and defensive coordinator, right? They're the guys that are out there that I can call to give me the data, to give me the information to make a decision. And as we work together, it gets better. So yeah, there's the base level reports, but it goes back to if you ask better questions, you get better answers. And the reason again, I'll just keep picking on Tanner because I talk to him so much. And the same thing with the team, but really Tanner, it's like, one, he can answer it better quick. And then 2, if he can't, he says, all right, Mike, I hear what you're saying. Let me spin something up to you and see if this is what you mean. So it's not like the data is just a tool in a toolbox. It's really important about, in my opinion, as a business owner, as an investor, who's presenting the data and what they're getting you that's actionable within the data. So that's a credit to you guys and what you're doing. So it's not about QuickBooks, but I get the question. Yeah, it's fucking, so everybody can do fucking QuickBooks, but what's in QuickBooks and what you're doing with the QuickBooks. So,
Thanks, Mike. Appreciate that. Thank you for your kind words. All right, do we have another one? Let's see here. Okay, what are the most common missteps you see? I think Mike was actually just speaking to one of them. What do you see other successful companies doing?
Tanner, I'll take this one. I see the same misstep over and over and over again. And it comes down to being a people issue. And that is that people are not properly leveraging the right individuals to do the work. They're misusing their CPA. They're misunderstanding the value that their CPA could be delivering and how they get that value delivered. They're misusing their bookkeeper. And I'll just give an example of this. We've worked with a number of companies where the fact of the matter is your bookkeeper should not be your mom or your sister or your aunt or your friend that doesn't have background in accounting. And maybe there's a time in the business that's appropriate, although I'd argue that it never really is. But it puts a strain on a relationship and a strain on your business because, to Mike's point, the data in there becomes garbage because that person doesn't actually know, and it's not their fault. They're just trying to get the work done. And so the biggest misstep I see is using the wrong person to do the work and then expecting them to be someone that they're not and provide something that they can't. And what I think successful businesses are doing is they're just leveraging the right people. They're hiring the right individuals. They're leveraging them properly. They're clearly defining for them what it is that they need, and they have proper expectations in place.
Thanks,
If I can
Brett.
offer one bit of color to that too, is I know often kind of in the startup phase of businesses, you're often looking for who you can get the most help from and frankly the best bang for your buck, which is oftentimes why you find that people are leveraging family members or friends for the bookkeeping. And while that's a noble endeavor on the front end, when cash is tight and you're trying to get off the ground, what we see time and time again with businesses that as much as it feels better in the moment to save that cost on the front end, unraveling and cleaning up challenging bookkeeping with errors is often more expensive than leveraging the right folks on the front end who have the expertise. For small businesses, I mean, generating invoices, paying bills. It's pretty simple, but the challenges and kind of the point of this webinar is what happens when you start to scale. As you scale the complexity of the accounting and kind of the ins and outs and the little nuances of what happens in the books become more and more challenging. And for someone that's maybe just, a bookkeeper that's good at the ins and outs, paying the bills, sending the invoices, they can very quickly end up over their ski tips as things become more complicated. Once you're layering in things like lending and financing and certain types of reports around EBITDA or net operating income, as the reporting gets more complicated, it tends to get out of control a bit quicker, and it's often more challenging to clean up on the back end.
Thanks, Tanner. All right, we've got just a few minutes here, so I think we've got time for one more question, of which we should try to answer in 2 minutes or less. What are good KPIs we should be tracking on our scorecard? I think Mike actually mentioned one earlier for the real estate industry, right? Cash flow by door, I think that's what Mike said, right?
Yeah, exactly. What's your true cash flow per door? And that's another thing that Gray Fox is able to help with, because I think a lot of people, especially in real estate, it's easy to have phantom cash flow, right? Oh, my mortgage minus my insurance and tax. Well, that's not cash flow. That's
Right.
you're in for a world of pain that's coming down the pipe.
Thanks, Mike. Tanner, any other KPIs that are typically tracked on scorecards?
Yes, I love this question. This is my favorite piece of finance and accounting is how do you take the data and create metrics that help make sense of your business? And I always say with the caveat that there's dozens and probably hundreds of KPIs out there. The secret to this is finding what kinds of KPIs are needed for you to make decisions about your business. The ones I find for general businesses that are really helpful, obviously your big ones, your revenue, your gross profit, your net profit, those kinds of things. Those are the big numbers that you're probably keenly aware of as a business owner. But beyond that, how can you start kind of analyzing the balance sheet and understanding your current ratio, your quick ratio? What's your working capital? What does that mean? If you're in the real estate space, understanding things like net operating income, cap rates, internal rate of return, as Mike alluded to, your cash flow by property, by door, by state, however you're parsing out that information, it's really helpful to know what kind of information you need as a business to make decisions. So, I mean, the sky's the limit on those. And I think the most fun piece about this is most business owners are like, I'd really like to know this one thing about my business. And that's the fun part about the KPIs is we can be creative around how do we measure, track, and quantify things that help give you data to make decisions.
Thanks, Tanner. All right, so this concludes our Q&A. We're going to go ahead and wrap here. So a couple quick next steps. We're going to go ahead and send out a follow-up that will include a link. Link's on the screen, but it will include a link that you can go ahead and take our financial clarity checkup to see how your finance account and function perform at. It's a self-assessment. I give you some quick data points. And then here's my one shameless plug. We threw a lot at you. Hopefully we got your wheels turning. We got you thinking about real case scenarios for your business. But I know some of you, again, finance is not your focus. It's not your expertise. You might be looking at that and saying, okay, where do I start? I need help. We can help. So we will follow up with that link, and we are here. We'd happy to set up a free one-on-one consultation if you like, and support your journey to financial clarity. Thank you everyone for attending. Have a great day.
Thank you, Steve.
Thanks. Appreciate it, everyone.